Good evening, everyone. As you all know that this session is in continuation with the previous session held yesterday, and our main focus today will be on indicators and theory of technical analysis. Uh, we will be starting the session just by 1 minute only, and to let you all know that the yesterday's session was did had some audio problem. So we have recorded that session again and it will be posted on our YouTube account, YouTube channel. And also the PowerPoint presentation which had shown to you yesterday, that will be also available to you. So anyone requiring that can contact us. So
Okay, so we will start now.
yes,
Okay,
welcome Omkar sir.
yes. So now today we are going to talk about indicators, and as Aditya said, today's lecture is in continuation with yesterday's lecture. So yesterday we talked about what are the different types of charts and what are the different types of indicators. What are the different types of charts and what are the different types of price patterns. So if we use those charts and those price patterns in continuation with the indicators, then we can get better results. So we can quickly identify the start of the trend as well as the reversal of trend. So basically, there are so many trends, so many indicators available in the market. But out of those indicators, if we focus on only some indicator, then it will be helpful to you. So here I'm going to include only those indicators which are included in the syllabus of CFI. So the first indicator that we are going to talk about is absolute breadth index. So how to compute such index? Basically, this is an indicator which indicate when to take entry and when to exit from the market. So in order to take entry or in order to take exit, in order to take entry or in order to take exit, you should know about this indicator. So the absolute breadth indicate is simply computed by dividing uh, by just getting the difference between net advances and net declines. So net advances stands for the number of stocks that has increases as compared to yesterday's closing, and net decline stands for the number of stocks fallen as compared to yesterday's closing price. Now, if we divide this product or this difference by the number of stocks traded, then we can get the absolute breadth index. So now, if there is in Nifty 50, there are roughly 50 shares, and out of those 50 shares, if 30 shares have shown in increased movement and 20 shares have fallen as compared to yesterday's data, so we'll get this absolute breadth index like this: 50 net advances 30 shares minus net decline 20 shares. So we'll get index, and this ratio will get like 40%, sorry, 49, 20%. So we can get that if we compute the absolute breadth index, we can easily identify whether the advances are greater than declines or the declines are greater than net advances as compared to the market. So if such index supports the momentum of Nifty or DJI, that is Dow Jones Industrial Average, if the absolute breadth index supports the momentum of Nifty 50 or Dow Jones, then it shows a strength in the market. That is, if this index supports the exact movement of the Nifty 50, then we can say that the number of advances are on the high side as compared to the net declines. But what if this index does not support? If this index does not support the momentum of the Nifty or Dow Jones, then we can say that there is weakness in the actual original trend. So if the market is going like upward trend, and if the absolute breadth index indicating that if this in this trend there are not so many buyers are involved, or all the shares are not showing that particular momentum which is required, so this is an early indicator that the trend is going to reverse. So if you keep a track on this index, we can be so this indicate well in advance that the market is going to reverse. So this is a basic index, but the main problem of this index is that this may give false signal, because the net advances as well as declines can be manipulated. Okay, so if we consider the result scenario, the quarterly result scenario, the number of advances can be greater as compared to the number of declines, because as company will declare its quarterly results, it will definitely rise their profit. It will definitely rise their sales growth. So if there is advance in the shares, so that can be easily manipulated by the that can be easily manipulate the absolute breadth index. So in order to protect from this manipulation, we can strictly avoid this index. Okay, so though it is in syllabus, but it is not that actually work, so that we can go further for another indicator, and that is volume of the trade. So what do you mean by volume? This volume suggests that the number of buyers or the number of sellers that are involved for a particular price. Okay, ठीक आहे. तर बेसिकली जी प्राइस मोमेंटम आहे त्याच्यामध्ये जे नंबर ऑफ बायर्स किंवा सेलर्स जेवढ्या जास्त प्रमाणात इन्व्हॉल्व आहेत, तेवढ्या जास्त प्रमाणात we can identify this the trend is that the trend has strength. Okay, so जर ट्रेंड वाढत असेल आणि there are number of buyers, कमी कमी number of buyers असतील, तर we can identify that buyers are not at all interested in such increasing trade, or the trend is downward but the number of sellers are so less, then we can easily identify that such downward trend is not at all accepted by the sellers. Okay, so if the trend and number of buyers and sellers are in coordination, or they are in connection with each other, then we can say that there is bullish or heavy momentum. Okay, so if price and volume of a share increases, then we can say that there is positive momentum, or we can say that there is a buy signal. On the other hand, if the price decreases as compared to yesterday's low or yesterday's close, or if price decreases as compared to today's low, and in such decreased price the volume increases, then we can say that the number of people involved in such low price are so high that there will be change in trend, and the trend can be downward. Okay, so if rise in price and rise in volume are coordinated, then we can say that there is a buy signal. But if price decreases and volume increases in such decreased price, then we can identify that there is sell signal. Okay, so how does this chart look like? This is a chart of Reliance India Limited. So this is a candlestick chart basically, and below I have shown volume chart. So if you could see here, the price was closed somewhere around 11,030, and very next day it has gone nearly about 1,300. Okay, so if you see here, the number of buyers or the volume involved here was 45 million. Okay, so the buyers were so much interested in such increasing price, so that the price momentum is still continuing. Okay, so with the help of such volume, we can easily identify the change in trade or the change in momentum. Okay, so basically these two indicators are there in the market, but out of the absolute breadth index, if we consider or if we focus for the volume, then that will be more beneficial. Okay, so the next type of index is relative strength analysis, and trust me guys, this is the best indicator I have seen ever. Because if you look at this indicator, I have read a book for like on this relative strength analysis, actually shared by Sushant. So on this very particular indicator, there is a one book of roughly 15 to 20 sorry 200 to 300 pages. So you can analyze that how much important is relative strength. Okay, so relative, what do you mean by relative strength? A relative strength means identifying the strength of the market as related to its previous prices. Okay, so this suggests that prices of some securities rise relatively faster in bull market or falls more slowly in bear market than other securities. So nowadays Nifty is falling like nothing else. Nifty has shown a down movement of around 38% in last 15 to 20 days. So though it has shown the momentum, downward momentum of 20%, sorry, 38%, there are a lot of shares which has not shown that much relative movement, or that 38 to 40% down movement. So that we can say that if if Nifty is going to start the rising trend, then these are the shares that are going to witness this change in trade for the first time. Okay, so RSI indicates that if you are investing in those shares which are in connection with the main share, that is in connection with the Nifty or in connection with the basic index, then we will be benefited as compared to other shares. So if you invest in those shares having higher return, having higher relative strength, then you will get more return. Okay, similarly if you compare the share of Reliance with in comparison to Nifty, so 15 to 20 days back, Reliance was trading at around 900, and within 15 to 20 days, or weeks, 3 weeks, it has shown a momentum of 700, sorry, 700, 600 positive momentum from its bottom, like around, now it is trading around 1500. So it has given a rise of 600 points. So if you are investing in those shares which has higher relative strength, then you will be benefited uh, early as compared to other shares. So on the basis of this relative strength, in 1978, Wells Fargo introduced a relative strength index. So what does this indicate do? This index helps us to identify the strength of that trend, or the strength at a particular price. Now, say for example, if Reliance was trading at 1500 3 months back, and now Reliance is trading at 1500, the price is similar. But if the number of buyers or the number of volume involved 3 months back and the number of volume now, if we compare those volume, or if we compare those number of buyers, then we can easily identify what is the relative strength index. So if the number of buyers involved in this 1500 price now are greater than the number of buyers as compared to 3 months back, so we can easily say that at this price higher number of buyers are involved as compared to 3 months back. So RSI measures the strength of a stock against its historical price. Okay. So basically, it compares price of itself, but it does not compare its price with other market or other security. So I have considered one example over here. If you look at this chart of Reliance, you will witness that Reliance is making high of around 1605, that is 1605 for the first time over here. Then again it is making a new high of 16,009, sorry, 1609. Then again in somewhere around January 20, it has again witnessed a high of 16,1605 when there was a result of the quarterly result of the Reliance. So this was the actual moment. But if you look at the RSI, here it is RSI indicator I have placed at the bottom side. If you look at the RSI, the number of buyers or the number of strength, the actual strength of that index was around 70 over here. But when the share made the same high, the strength has declined as compared to earlier strength. So it has, if you connect these lines, we'll get a not actually a downward line, but somehow down line. But if you look at this point, RSI, sorry, the share has made again the same high as it has made earlier. So we can consider this as double or triple top, like we have discussed day before yesterday. So here price has made the same high of 1609, but here the number of, or the strength of the RSI is showing at downward side roughly around 60. So if you compare this RSI or this RSI with this RSI, and if you connect the line, then we can say that there is a downward momentum. That is, the strength of the share is falling, even though the price of the share is not falling. So what we can analyze from this, we can analyze that as the price of share is going to increase, the number of buyers are not at all interested in such high price. So they are expecting that the price of share is going to fall. And look at this, as soon as the price has the RSI has shown a divergence, price has shown a downward momentum of 200 points, roughly 16,000 to 1600 to 13,1350, roughly 250 percentage 250 points down. So if you calculate this in percentage terms, that will be around about 15%. So share has shown a 15% movement in just less than 15 days. Okay, so that we can identify well in advance with the help of RSI. Okay, so this is one of the example. Again, I'm going to show you the example of same Reliance. Here you can see that on 1st or 2nd February, when actually 1st February, when the budget was announced, Reliance has shown the low of 1371 around here, and after 1 month, it has shown the same low of 1371. But if you compare the RSI with the earlier lows, then you could witness that the strength is increasing. That is, if you connect these lows with the line, then we can see that the number of buyers involved at this low price were higher. So people are expecting that the price is going to continue in the same trend. So after that, the price has shown a sharp momentum of downward momentum from 1400 to roughly 900. So 500 points down momentum. If you able to crack this momentum, or if you able to crack the RSI. Okay. So another example that is very interesting example regarding RSI itself. So if you look at here. Okay, if you look at here, price has made a high of 1609 over here. Again, it has made the same high of 1609. Again, it has made the high of 1609. But the RSI, if we connect the high points of RSI, we'll get a trend line that is sloping downward, whereas price is making the same highs. Whereas the line of price is same flat, but the line of RSI is downward. So this indicates that even though the price is making higher highs, or a price is making earlier highs as compared to this high, the number of buyers involved in this high price are low. So what we can get from this, we can get that after this momentum, the price is going to witness a sharp fall. So if we short this security below 1400, we could have gained a momentum of roughly 200 points, near about 1400. So we could have gained that momentum by short selling. So what do you want to do? You just want to compare the candlestick, or compare whatever is the chart pattern with the RSI, and if you are able to crack the RSI coding, then you are through. Then you can identify the, or you can evaluate what is going to happen in future. Okay, so another very interesting example over here in Nifty 50, the index that we are trading, Indian index. So if you look at this, the price Nifty has made a high of 12,000 in somewhere around November 15. Then again Nifty has made the higher high as compared to earlier high. Again somewhere around last week of the December, when the impact of COVID had just started in China, price has made a new high, okay, as compared to earlier high. And in January 15, the price has in roughly third week of January, the price has made another high. So if we connect all these high, as like I have connected over here, if we connect all these highs, we will get a trend line which is sloping upward. But if you compare this upward sloping trend line with the RSI, that is the strength of the share, the strength of the Nifty 50 as against its earlier price, then what we see here, when the Nifty was at 12,000 around, the number of buyers, or the volume involved here was so high. But again, when the Nifty made a new high, the volume gets decreased. Okay. Again, if you look at here, the volume gets decreased, and again the same happen here. Even though price is making new higher highs, the number of buyers or the quantity of investors or the quantity of traders is has started decreasing. So though the price is showing an increasing trend, the RSI, the strength of that particular share is showing decreasing trend. So what does this indicate? This indicates a divergence in price. So you can take the benefit of this divergence by simply shorting this share or by shorting Nifty over here. And if you could have shorted this Nifty roughly around 11,500, so you could have witnessed a tremendous gain of roughly 4,000 points, because Nifty has made a low of 7,500. Even though if you're not able to catch the highs and lows, if 1,000 point momentum is also great, because the lot size of Nifty is around 75 points, 75 shares. So if you could have purchased only one lot and hold that lot for 2 to 3 months, then you could have made a profit of 75,000. Okay, so this you can easily do this by just identifying the RSI, by just identifying the strength of the share as compared to its earlier share price, so historical share price. Okay, so this is like RSI, the relative strength index. But if you look at your syllabus, the relative strength index is not that much widely discussed in your syllabus, but this is how actually it is. This is how actually it works in actual market. Okay, so the next indicator that we are going to see is odd lot theory. So what do you mean by odd lot theory? Odd lot theory is nothing but it is just like a contrary opinion. That is, if a market is going in upward, then you should expect exact opposite of that. That is, if you compare odd lot theory, you will get like it is just like a contrary opinion or inverse opinion. So there, the basic assumption behind this odd lot theory is that the average person is wrong. Whatever the average person is thinking is simply wrong, because average person know nothing about anything, because he's just the layman. He's just looking at the charts. He's just looking at the patterns. He's just looking at the indicator. But the main people are around there who are sitting at NSE, or who are sitting at some discretionary power. They are holding some sensitive information. So they are going to hike the momentum, and once the momentum or the once expectations of the people are reached at its peak, then they are going to shoot that price from downward, or that can even happen at the bottom as well. Okay, so we can call it as a contrary opinion. Like the example, I would like to quote an example. If you look at the magazine of 2000 in 2005, every magazine cover was showing an example that the real estate business is just going to shut in recent 1 to 2 years. So at every magazine, there was a news on cover page that the real estate business is going to shut in within 1 to 2 years. But if you look at this, what does happen? In 6 to 7 years, the real estate business has just shown momentum roughly 2 to 3 times as it was in 2004. So basically, these points are showing that the average person is wrong. Average person is acting according to the information available, or according to the information that has been shown to him. So if you are smart enough, what do you want to do? You just go exactly opposite how you are looking, or how you are experiencing market. Okay, so this is the odd lot theory. So how can how can take the benefits of this? You just have to wait for the majority opinion to reach at its peak, and then you should require to assume exactly opposite. Okay, so with the help of this, you are able to identify, you are able to be profitable. Okay, so how can we implement this odd lot theory in in practical life? Even though it looks so simple, but it has greatest impact ever, because the things which are simple in nature, uh, one sec. Okay, if the prices are if the particular index, or if the particular indicator is looking simple, then trust me, this is the greatest indicator that will give you the greatest results in actual. Because the next example that I am going to show you, that will blow your mind. Just look at this example here. I have taken the same example of Nifty and RSI divergence. Now, with the help of RSI, we have witnessed that the Nifty is going to reverse. This is the same chart that I have discussed 5 minutes back. Okay, so with every new high of the Nifty, RSI is making new low. Okay, so this is the first impact that Nifty is going to witness a lower point. But what does this odd lot theory suggest? This odd lot theory suggests that let the majority person, let the imagination of majority or average person or common man reach at its peak. So how can we identify this? How can we identify this peak? There is nothing, there is nothing like any formula to identify the peak. But what you can do, you just draw the trend line, identify where could be the peak. So if the price is trading somewhere around here, then we have to wait to touch the price over here. And if you look at the technical analysis, then you will definitely witness that if you draw a trend line, then the price is 100%. The price is going to witness, or the price is going to touch that trend line for sure. So even though it looks like the price is not at all going to touch that resistance or support line or trend line, but this does not happen always. Majority, literally 90 to 95% of the time, the price will touch, or the price will go through the trend line. So here the majority of the person who are the retail investor, they're expecting that as Nifty is going to show the lifetime high every day, every week, every month. So Nifty is going to witness the lifetime high in the next period also. But what did happen? As the majority opinion reached at its peak, Nifty had witnessed a sudden down of roughly 40%. So from November to February, Nifty is witnessing a higher high, higher high, higher high, higher high for 4 times. And once it reaches its peak, it has shown a downward momentum of 40%. So this is the odd lot. Even though it looks so simple, but it will work like charm. It will work so beautiful in the live market. Okay. So this is also one of the best indicator. There is nothing like RSI. We have plotted RSI indicator over here, but there is nothing like indicator of odd lot. You just have to observe the market, and you just have to calculate the odd lot theory. Okay, so these are the three basic indicators that has been covered in your syllabus. But what are the other indicators that are in market? So basically there are different indicators also, but out of those I have just considered some indicator over here. And one of the indicator is moving average, and this is the best indicator. But even though it is lagging indicator, you can assume that you can very well use this indicator to identify support and resistance zone. In this indicator, the close of everyday price, the average is calculated of close of every prices, and through that average a line is drawn. We call it as moving average line. Okay, the next indicator is the stochastic indicator. This stochastic indicator indicates the position of overbought and oversold in a market. That is, when the market is overbought, that is, the number of buyers are involved are so high as compared to number of sellers. So at that time, the price is going to hold for some time, and the overbought situation is going to come down. So if you purchase the security at overbought level, then definitely you are going to witness a loss. And at the same time, if you could have sold the share or sold the security at oversold level, then definitely you are going to lose money. So for that matter, you have to just look at the stochastic, whether the situation is overbought or oversold. If it is overbought, then take the exact opposite situation, and if it is oversold, then take the exact opposition. That is, if the position is overbought, then you just have to short sell the market. And if the position is oversold, that is, the number of sellers are greater, are more as compared to number of buyers, then in that case you just have to buy the security. Okay, so these overbought and oversold words are, you must be hearing somewhere around TV or news channels or something in newspaper also. Okay, so the next indicator that I'm going to talk about, MACD, that is moving average convergent divergence. So basically this is the greatest indicator I have came across, because this shows the convergence and divergence of different types of moving averages. So here we have look near about one moving average. But if we compare more than one indicator, and if we consider the conversion as well as divergence of those moving averages, then we can calculate the MACD index and we can get the benefit of the market. So these are the number of indicators that can be used in the market, and which can we can use those indicators to get our trades profitable, as well as to read and study the market. Okay, so till now we have seen a lot about technical analysis. Like we have seen chart patterns, chart types. We have seen different types of price pattern. We have seen different types of indicator. Now we are going to just recap in short span. That is the meaning of technical analysis. Okay, so what is the technical analysis? It involves identification of price momentum based on the price action indicators that just we have completed, charts, patterns, and oscillators. Oscillator means the particular indicator which oscillates within range bound. Okay, so if this is a range, okay, so if it is like 80 and if it is 20, if I'm talking about stochastic. If the oscillator or the indicator comes over here, and then it should have to come down, then again it has to go. So that is it is moving in a particular range, that is it is range bound. So we can say that the indicator is oscillating, or the price is oscillating through the particular limit. So it is nothing but identification of the momentum of price based on price action, chart types, chart patterns, indicators, and oscillator. Now, at the same time, we can use the technical analysis to identify or to identify when to take entry into the trade, that is starting of a trend at a lower price, and when to exit. So if you are looking a trend like this is upward, then downward, and again upward, then again downward, and again upward. Now, if you could have taken entries somewhere around over here, then you could have witnessed a loss, because that the price is going to witness a drawdown. Okay, or if you could have shorted the market over here, then probably you could have lost your money, because the price is going to go upward. So technical analysis helps you to identify exactly where the trend is going to do what. Because if you are able to purchase over here, and if you are able to ride the whole trend, then then it is the best use of the technical analysis. Okay. So technical analysis will enable you to identify the exact trend, and to identify or to tell you about the exact entry point. Okay, so basically what we have looked until now is like there are two basic methods involved in technical analysis. These are visual methods and statistical. Visual methods we have completed yesterday, like different types of charts like candlestick chart, bar chart, point and figure chart, line chart, etc. And different types of price pattern like isosceles triangle, symmetrical triangle, ascending descending triangle, double top, double bottom, or what you can say head and shoulder pattern, or wedge pattern. Like these are the different types of patterns. We call it as visual method because we can easily visualize, or we can see those momentum, or we can see these types of patterns in live market. So these are called as visual method. Whereas there are some statistical methods which involves oscillators or price momentum, or these could be indicators like RSI, moving averages, MACD, and etc. These are the statistical methods because the composition of those indicators involve different types of statistical calculations. Okay, so if you calculate the data statistically, then you could probably identify the next momentum. Okay, so moving on further. Now technical analysis is based on certain assumptions. So what are these assumptions? Let's go into and look into it. So the first assumption is that the price is determined on the basis of demand and supply. Basically, price is a product of demand and supply. That is, if this is a point of demand and this is a supply, then the point where demand and supply intersects each other, this will be the price of the market. This is the basic economic principle has been followed by technical analysis. Okay, so this applicables everywhere. Okay. So if you are purchasing a particular security, or if you are purchasing vegetables in market, if you are purchasing gold from the market, then this applicables everywhere. The point where demand meets supply, this is the point where you can identify the price of the share. Then The demand and supply, both points are basically dependent on the factors like government, policies of the government, biological factor like now we are witnessing COVID impact, environmental issues, psychology of the investors. So there are numerous factors which impact the demand and supply of the product. Okay, so if you are looking, if you are witnessing current situation because of the COVID-19, the demand for the online demand for products through Amazon has decreased, or the online demand for Netflix has increased. So these are the psychology of the investors, or these are the biological impact on the market, or these are the important impacts that we are going to assume while computing the technical analysis. So the next, this is the example of COVID-19 for assumption. The next point is that the stock prices generally moves in a trend which may continue for substantial period of time. Such trend can be long term or short term. Basically, the one of the basic assumption of technical analysis is that the price always moves in a trend. Basically, there are three types of trend. One is uptrend, like the price is moving like this in uptrend. Then the next trend is downtrend. The price is witnessing the momentum like this. And then there is third type of trend, that is the consolidation, or what we call it as sideways market. Okay. So these are three types of trend that the price is going through, and price is going to witness these three types of trend for the lifetime of its lifetime. Okay. So for some period of time it will witness the uptrend. For some point of time it will witness the downtrend, whereas for some point of time it will witness the sideways momentum. Okay, so this works like a cycle. The after these three trains are done, then again it will go to the first train, again it will start the second, again it will start the third. But the order of the train is not at all same in all the time, because the order can be different in different types of stocks. Okay, so the basic assumption behind the technical analysis is that the prices of the stock moves in a train. Now this involves the chart analysis, which shows fast changes in share prices rather than information available in financial statements. So this is the most important assumption in in technical analysis, is that uh, technical analysis does not impact, or it is not based upon the financial statement or the data that has been given into the financial statements. So this basically involves the momentum of the stock based on the chart, based on the patterns, based on the oscillators. So these are all oscillators, price patterns, chart patterns. These are all calculated statistically. So the price of the share is not at all influenced by any financial statement. So this is the basic assumption of technical analysis. So the information provided in financial statement is already available to everyone. So everybody is going to witness these changes, and everybody is going to act according to the information available to the financial statement. But in order to be a profitable technical analyst, you just have to read the chart properly. You just have to analyze the chart properly, irrespective of the financial information. Okay, I'm not here saying that financial information is not at all important, but for technical analysis, it is not that much worthy. But if you are doing fundamental analysis, then definitely this financial statements or this financial information is very much important and very much useful to the analyst. Okay, so these are some of the assumptions that we are going to be that we are witnessing while doing the technical analysis. Now the next point is the principles of technical analysis. Which are the principles, or which are the basic points on which the technical analysis is based on? One of the major principle is that market discounts everything. Everything is discounted by a market. It means every news, every data, every price momentum, everything is discounted by the market. So whatever the price of the market, whatever the price of that share, that price justifies everything. So one of the major principle of technical analysis is that market discounts everything. The next principle is that price moves in a trend. Like we have discussed earlier, there are basically three types of trend: upward, downward, and sideways trend. So in overall scenario, or in 5 years, 10 years, 100 years, you can take n number of period. So all these three periods, the price is going to move in. The price is going to follow that trend continuously. Okay, the trend can be either upward, downward, or sideways. The price is not at all going to witness any type of different trend because these three types of trends involves a particular cycle, and cycle is going to repeat or cycle is going to reverse after it has completed. Okay, so basically price moves in a trend. And the third basic principle of technical analysis is that history tends to repeat. Okay, basically this is the principle because technical analysis is done by human being. Okay, and human being is going to repeat what he has done in his history. Okay, so all this impact in technical analysis also. So how does this indicate? History tends to repeat. If you are able, like we have seen somewhere around here, just a minute. Okay, if we are looking over here, double top or double bottom pattern. See over here. In 2015 around, price has taken halt on 7,500 momentum, and the same halt is continued in 2020. After roughly 4 years, the price has witnessed a support at around 7,500. So basically, people were thinking, basically the investor were thinking that the price, as it has witnessed the support in 2015, the price is now going to witness the same support in current financial year. So as soon as the price touches the 7,500 momentum, the number of buyers involved or buyers will rush into that security and they will start buying these shares like nothing else. Okay, so this will look like history tends to repeat. Okay, but I would like to add one thing over here. History does not repeat itself, but it rhymes because whatever the mistakes we have done in 2015, all these mistakes that we are not at all going to incur again in 2020. So we will overcome these mistakes that we have done in 2015 and we will make new mistakes in 2020. Okay, so this impact of mistake is जर आपण त्या मिस्टेक्सचा वरती जर अभ्यास करून आपण त्या मिस्टेक्स जर ओव्हरकम केल्या असतील तर डेफिनेटली आपण याच्यानंतर वाढू शकतोय आणि इथे एक नवीन प्रोबॅबिलिटी आहे की वी आर गोइंग टू मेक न्यू मिस्टेक्स. सो इन्स्टेड ऑफ रिपीटिंग हिस्ट्री वी आर जस्ट revising history or we are just rhyming the history. Okay, so these are the three basic principles of market. That is, markets discount everything, price moves in a trend, and the third is that history tends to repeat. That is, we can call it as history history will rhyme itself. Okay, now moving on further, the next is a theoretical part, like theory of technical analysis. Right now, until here we have seen a pretty practical aspect of the technical analysis. Now we are going to look about the theory of the technical analysis. Basically, there are two theories of technical analysis. One of the basic and important and major theory is the Dow theory. So, what do you mean by a Dow theory? This theory is nothing but the theory or theorems that has been written or that has been formulated by Mr. Charles Dow. Charles Dow is the father of technical analysis. Okay, so he has never formalized his theories. He just has witnessed all the momentum, all the price trend, all the data he has witnessed. He has just written down it into the paper and used that information to trade into the market. But he has never practically, he has never formalized all his findings. But the theory comes to ही theory जेव्हा invent झाली, that theory is invented by AC Nelson, a follower of Charles Dow. After the death of Charles Dow, AC Nelson found all his papers, all his findings, all his study material, and out of those study material, he has invented a theory called as Dow theory. This is the basic and this is the one of the oldest theory because this theory is roughly 100 years old and this theory is still it is applicable. Okay, so Dow Jones Industrial Average is a mixture of industry. Basically, the one of the major impact of Dow Jones theory is that Dow Jones has identified that the index is a component or it is a mixture of industry and transportation. Okay, so during 1900 century, the, the the production that we have produced in industry, that production has to send to the customer, or it should have reached the end level. And how can we send that product? There was only one way available, that is by railroad. Okay, so if industries are producing properly, and railroads or railway is working properly, then only the economy is going to witness the proper change, that proper recycling. But if any point is not in coordination with earlier point, that is, if industry is making properly goods and producing goods, but railroads are that not worthy, or railroads are not that pretty available, then the production will stay in industrial area itself. So the production will not go to the end user. Or at the same time, if railroads are proper but industry is not producing the required material, then there is त्या रेलरोड चांगला असण्याचा काही उपयोग नाही. त्याच्यामुळे हे दोन्ही सुद्धा एकमेकांशी कनेक्टेड आहेत, आणि ते दोन्ही सुद्धा एकमेकांशी संलग्नपणे काम करतात. जर इंडस्ट्रीचं प्रोडक्शन असेल, तर दॅट प्रोडक्शन शुड हॅव रीच टू द एंड कस्टमर बाय रेलरोड. ओके, सो याच्या बेसिस वरती he has invented Dow Jones Industrial and Railroad Average, what we call it as DJIA, Dow Jones Industrial Average. Now, Dow Jones was like Ram in Ramayana. Okay, असं का? तर he used to be like so calm, so cool, that प्रॉफिट जरी झाला असेल तरी he used to be cool, and लॉस जरी झाला असेल तरी सुद्धा he used to be cool. आता ही क्वालिटी तसं बघितलं तर फार कमी लोकांच्यात सापडते. प्रॉफिट झाला तर लोक आनंदित असतात, पण लॉस झाला तर विनाकारण टेन्शन घेत असतात. ओके, पण बेसिक रिक्वायरमेंट ऑफ टेक्निकल अनालिसिस दॅट प्रॉफिट अँड लॉस बोथ आर द पार्ट अँड पार्सल ऑफ द गेम. सो प्रॉफिट पण होऊ शकतो, लॉस पण होऊ शकतो, बोथ हॅज इक्वल प्रोबॅबिलिटीज. सो काही होऊ देत, you should have to be constant, you should have to be stable. Okay, so this was the basic theory given by Charles Dow, and one of the greatest finding of his theory is that the primary movement of the moment of the price, or the moment of the market, is basically divided into three types of trend, that's primary, secondary, and daily. Primary momentum means price momentum which lasts for more than 1 year, whereas secondary momentum is long lasting from 2 weeks to months, or more than months, 12 months, or up to 1 year. But the third is daily, that is this basically is calculated only for trading purposes, that is this type of momentum are daily. So all these momentums are fractal in nature. That is, fractal means if you have seen an ice cube, and if you could have cut the ice cube, then you can witness that the small portions of that ice cube are witnessing the same structure as it was in original ice cube. So these, what we call it as fractal. That is fractal in nature. They are all fractal in nature. The momentum that is going to witness in daily time frame, the same momentum that is going to witness in weekly time frame, the same momentum that is going to witness in yearly time frame. So the basic trend remain itself, and it will remain its propriety, and it will continue, or it will see, we can see that momentum, whatever may be the time frame, or whatever may be the moment. So so basically this is the Dow theory, one of the major and one of the most important theory of technical analysis. Now the second theory is the Elliott wave principle. Okay, now if you are able to use Dow theory in addition with Elliott wave principle, then you are through. मग तर काय विषयच नाही, कारण की टेक्निकल अनालिसिसचा बेसिक कॉन्सेप्ट आहे डाव थिअरी प्लस एलियट वेव्ह. डाव थिअरीच्या प्रिन्सिपल्स वरती इफ यू आर गोइंग टू इम्प्लिमेंट एलियट वेव्ह प्रिन्सिपल, त्याच्यानंतर तुम्हाला जर एक्झॅक्ट मोमेंटम मार्केटचं किंवा एक्झॅक्ट सिच्युएशन मार्केटची लक्षात आली, तर देन 100% तुम्ही मार्केटमध्ये सक्सेसफुल होऊ शकता. तर व्हॉट डू मीन बाय एलियट वेव्ह प्रिन्सिपल? बेसिकली इट इज अ वेव्ह प्रिन्सिपल. वेव्ह म्हणजे वारा असेल किंवा व्हॉट वी कॉल लाट. ओके, so there are two types of waves, like impulsive wave and corrective waves, and both these wave makes a complete cycle. So here is an example of uptrend into the market. So while we are witnessing this uptrend, price is not at all going to rise in steep manner, like in straight range. Okay, so how does price is going to increase? Price will increase then price is going to witness some drawdown, then again it will increase, then it will again witness a drawdown, then it will again increase, and so on and so forth. So these waves we call it as impulsive and corrective waves. So this is basically invented from the human nature. जसं आपण श्वास घेताना आपण सलग कंटिन्युअसली श्वास कधीच घेत नाही. आपण पहिल्यांदा थोडा श्वास घेतो, त्याच्यानंतर थोडा श्वास बाहेर सोडतो, पुन्हा आपण श्वास घेतो, पुन्हा आपण बाहेर सोडतो, पुन्हा आपण श्वास घेतो, म्हणजे ही प्रोसेस कंटिन्युअसली होत राहते. तीच प्रोसेस म्हणजे एलियट वेव्ह प्रिन्सिपल आहे. म्हणजे आपण श्वास घेतो म्हणजे दॅट इज इम्पल्सिव्ह वेव्ह. आपण श्वास घेतो, त्याच्यानंतर आपण थोडा श्वास सोडतो, त्याच्यानंतर पुन्हा घेतोय, पुन्हा सोडतो. सो जोपर्यंत माणसाचं अस्तित्व आहे तोपर्यंत श्वास घेणं आणि सोडणं ही प्रोसेस चालू आहे. त्याच्यामुळे जोपर्यंत शेअर मार्केट किंवा जोपर्यंत टेक्निकल अनालिसिस जिवंत आहे तोपर्यंत एलियट वेव्ह प्रिन्सिपल्स जिवंत राहते. कारण की बेसिकली दिस इज टोटली डिपेंडिंग अपॉन द ह्युमन नेचर. ओके, सो हिअर आय हॅव सेड वन थिंग दॅट इम्पल्सिव्ह अँड करेक्टिव्ह वेव्ह मेक्स अ कम्प्लीट सायकल. आता इथे बघा, द ट्रेंड इज लाईक दिस, अपवर्ड ट्रेंड. Okay, so we are witnessing an impulsive and corrective wave in uptrend. So we are going to witness the same impulsive and corrective wave in downward trend also, downtrend also. So how can we do this? The price will move sharp, then price is going to move upward again. Again it will witness a drawdown. Again it will go up somewhere here, and again it will come down. Okay, so if we connect all these points, we will witness a cycle. Okay, so this is a kind of cycle, and this cycle is a technical analysis. This cycle is long lasting for roughly 9 to 10 years. So if you are able to witness 2008 and if you are able to witness 2018 or 2020, then we could have seen that a particular cycle has completed, and from 2020 onwards we are going to witness a new cycle. त्याच्याच पुढे आता लोक सांगतात की आता मार्केटमध्ये इन्व्हेस्ट करा, आता तुम्ही इन्व्हेस्टिंग चालू करा, 10 वर्षानंतर तुम्हाला नवीन खूप चांगले फळ मिळू शकतात. का तर दिस इज गोइंग टू बी अ न्यू स्टार्ट टू अ न्यू सायकल. कारण की सायकल कम्प्लीट होते म्हणजे काय, तर करेक्टिव्ह वेव्ह कम्प्लीट झालेली असते, म्हणजे तुमचा डाऊन ट्रेंड कम्प्लीट झालेला आहे. त्याच्यानंतर काय आपण विटनेस करणार आहे, आयदर वी आर गोइंग टू विटनेस अ साइडवेज and then we are going to witness an uptrend. Okay, so basically याचा नंतरचा नंबर आहे तो uptrendचा. So from here onwards we are going to witness an uptrend into the market probably. म्हणजे आता ऍक्च्युअली हे सगळं assumption आहे, पण let's see how it works. Okay, so basically these are the two basic theories of theories of technical analysis: Dow theory and Elliott wave principles. Okay, so if we are able to analyze these theories in practical market, then we are through with the technical analysis. Okay, so here is a live example of corrective waves and impulsive waves in live market. Like Nifty is witnessing an high, then it is again witnessing some drawdown, then again it is making some high, then again it is coming down, again it is making new highs. Okay, so if we calculate this trend, these waves over here we call it as impulsive wave, म्हणजे इथं आपण श्वास घेतोय, आणि these wave we call it as corrective waves, that is इथं आपण श्वास सोडतो या दोन वेव्हच्या ठिकाणी. म्हणजे एक कम्प्लीट मोमेंटम बघा, 2500 पासून 12500, म्हणजे विचार करा एक पूर्ण वेव्ह व्हायला जर पर्सेंटेज रिटर्न जर काढला तर रफली 400 टाइम्स रिटर्न आहे, म्हणजे चौपट रिटर्न तुम्हाला मिळाले. चौपट नाही, 5पट, 500 टाइम्स, 500% रिटर्न आहे. ओके, त्याच्यामुळे these are the best principles that I have came across. Okay, आता त्याच्यानंतर बघा, how can we use data analysis for decision making. आता डेटा अनालिसिस म्हणजे काय, तर आपल्याकडे ह्यूज डेटा अवेलेबल आहे, अँड आउट ऑफ दॅट डेटा हाऊ कॅन वी टेक डिसिजन्स. तर आता डिसिजन घेण्यासाठी बेसिकली आपल्याला मुव्हिंग ॲव्हरेज वापरता आलं पाहिजे. आता मुव्हिंग ॲव्हरेज आपण ऑलरेडी डिस्कस केलेलं आहे. तर मुव्हिंग ॲव्हरेज म्हणजे काय, तर सिंपल ॲव्हरेज, सिंपल अरिथमेटिकल ॲव्हरेज जे आपण प्राइस मोमेंटमशी कॅल्क्युलेट करतो. ओके, सो फॉर एक्झाम्पल जर आपण मागच्या 10 दिवसाच्या प्राइसचं ॲव्हरेज काढणार असू तर आपण काय करणार की 10 दिवसांच्या प्राइसचे, समजा पहिल्या दिवशी प्राइस होती 81 रुपये, दुसऱ्या दिवशी 82, तिसऱ्या दिवशी 84 आणि 10व्या दिवशी 90. अशी प्राइस मोमेंटम देत असेल 1-1 रुपयाची इन्क्रीज दर दिवशी, तर त्याची ॲव्हरेज प्राइस काय होईल, तर रफली 85 to 86. ओके, सो दॅट विल बी द ॲव्हरेज प्राइस. आता ज्यावेळेला 11वा दिवस जाईल त्यावेळेला काय होईल, ते 10 दिवसांचं पुन्हा ॲव्हरेज काढलं जाईल आणि त्याच्यातला एक नवीन पॉईंट ऍड केला जाईल आणि हे जे ऍव्हरेज पॉइंट्स आहेत ते कनेक्ट केले जातील एका लाईनला, ज्याला आपण म्हणतो मुव्हिंग ऍव्हरेज. ओके, सो मुव्हिंग ऍव्हरेज, देर आर व्हेरियस टाइप्स ऑफ मुव्हिंग ऍव्हरेज, लाईक सिम्पल मुव्हिंग ऍव्हरेज, एक्सपोनेन्शियल मुव्हिंग ऍव्हरेज, वेटेड मुव्हिंग ऍव्हरेज, and so on and so forth. This is useful for crossover strategies. आता crossover strategy कशी आहे ते तुम्हाला एक्झाम्पल मी दाखवतो. त्याच्यानंतर we can call it as lagging indicator. Just remember these theory points. Next slide मध्ये हे सगळे theory points क्लिअर होऊन जातील. Lower time period of moving average is more sensitive as compared to higher period moving average, and finally they work like support and resistance. This is the main basic what we call disadvantage of moving average, that the earlier period the moving average drops off earlier period data, so it is difficult to compute or difficult to calculate because it does not consider earlier momentum. Okay, so आता हे सगळे theory points just लक्षात ठेवा, आपण इथं आपल्याला तुम्हाला लक्षात ठेवा. ओके, आता हा रिलायन्स शेअरचा प्राइस पॅटर्न आहे. ओके, पूर्ण एक साधारणपणे माझ्या मते तरी एक 7-8 वर्षाचा डेटा इथं आपल्याला दिसत असेल. ओके, इथं मी काय केलंय, दिस रेड लाईन इंडिकेट 50 दिवसांचं मुव्हिंग ऍव्हरेज. ओके, 50 दिवसांमध्ये प्राइसची जी काही चेंज होती ऍव्हरेज, तर ती ऍव्हरेज चेंज इज इंडिकेटेड बाय दिस रेड लाईन. ओके, आणि दिस ब्लू लाईन ओव्हर हिअर इंडिकेट्स 200 डेज मुव्हिंग ऍव्हरेज, म्हणजे 200 मागच्या 200 दिवसात. आता 200 दिवस म्हणजे रफली 1 वर्ष, कारण की मार्केट 360 दिवस काय काम करत नाही, कारण की महिन्यातले 8 दिवस तर सुट्ट्या असतात, त्यामुळे वर्षाचे जवळपास 100 दिवस सुट्ट्या होतात आणि त्यातनं पण आधीमध्ये सुट्ट्या असतात. त्यामुळे रफली मार्केटचं एक कॅलेंडर इयर हे 200 दिवसांचं असतं. त्यामुळे 200 दिवस म्हणजे जवळपास 1 वर्षामध्ये प्राइसनं कशी कशी मोमेंटम केली. आता बघा, सगळ्यात बेसिक पॉईंट पहिला होता तो म्हणजे काय सांगितलं होतं की लोअर पिरियड मुव्हिंग ऍव्हरेज इज मोर सेन्सिटिव्ह ऍज कम्पेअर टू हायर पिरियड मुव्हिंग ऍव्हरेज. ओके, त्याच्यामुळे बघा, थोडासा जरी चेंज झाला मार्केटमध्ये तरी सुद्धा लोअर पिरियड प्राइस मोमेंटम तुम्हाला लगेच इथं त्याच्यामध्ये चेंजेस दिसू शकतात. कितीही मोठा चेंज होऊ देत, ती निळी लाईन जी आहे, जी लॉंगर पिरियड ऑफ टाइमची आहे, ती स्टेबल आहे, ती एकदम अचानकपणे बदलत नाही. का तर ती बदलण्यासाठी 200 दिवसांचा पिरियड होऊन द्यायला पाहिजे. जोपर्यंत 200 दिवसाची मोमेंटम सेम होणार नाही तोपर्यंत ती मोमेंटम चेंज होणार नाही. त्याच्यामुळे दिस इज लेस सेन्सिटिव्ह ऍज कम्पेअर्ड टू 50 डेज मुव्हिंग ऍव्हरेज. हा झाला फर्स्ट पॉईंट. सेकंड पॉईंट इज दॅट दिस मुव्हिंग ऍव्हरेज वी कॅन यूज इट ऍज अ क्रॉस ओव्हर स्ट्रॅटेजी. आता क्रॉस ओव्हर म्हणजे काय, when 50 days, that is lower period moving average, crosses below higher period moving average, then we can witness a change in trend. आता बघा, ज्याला 50 day is above 200, then we can say that momentum is increasing, and when 50 days moving average is below 200, we can say that momentum is decreasing. पण ज्यावेळेला 50 day क्रॉस करते 200 ला from above, then we can say that price is falling. ओके, सो प्राइस इज फॉलिंग. आता इथं बघितलं आपल्या लक्षात येईल, इथं आपला क्रॉसवर दिले आणि वी कॅन आयडेंटिफाय दॅट प्राइस इज फॉलिंग. ऍट द सेम टाइम ज्यावेळेला इथं खालून वरती इंटरसेक्ट केलंय, त्याला आपण आयडेंटिफाय करू शकतो की इथं मार्केट कन्सॉलिडेट होतं, त्याच्यानंतर मार्केट वाढलेलं आहे. ओके, त्याच्यामुळं दिस इज वर्किंग लाईक क्रॉस ओव्हर स्ट्रॅटेजी ओव्हर हिअर. ठीक आहे, आता त्याच्यानंतरचा इम्पॅक्ट बघा, दिस मुव्हिंग ऍव्हरेज इज अ लॅगिंग इंडिकेटर. आता लॅगिंग इंडिकेटर म्हणजे काय, तर जो काही सिग्नल तुम्हाला मिळतो तो सिग्नल लॅग. आवाजात काय प्रॉब्लेम आहे का आदित्य? ओके, सो दिस इज अ लॅगिंग इंडिकेटर. का तर इथं बघा, प्राइस ऑलरेडी शोन अ डाऊनवर्ड मोमेंटम, पण डाऊनवर्ड मोमेंटम दाखवलं जरी असेल आधी, तरी देखील इंडिकेट कधी केलंय, खूप लेट केलंय, ज्यावेळेला प्राइस इथं पुन्हा रिव्हर्स झाली, त्याच्यामुळे आपल्याला लेट इंडिकेट होत आहे. सिमिलरली इथं बघा, प्राइस हॅज ऑलरेडी स्टार्टेड इट्स मोमेंटम, पण आपल्याला मोमेंटम लेट लक्षात आलं. आता आणखीन कुठं, तर हा इथं. ओके, आता इथं बघा, प्राइस ऑलरेडी 1600 वरनं 1400 वरती आली आहे आणि त्याच्यानंतर आपला इथं सिग्नल मिळाला आहे. त्याच्यामुळे इट इज वर्किंग ऍज अ लॅगिंग इंडिकेटर. का तर मोमेंटम झाल्यानंतर आपल्याला त्याचं माहिती मिळते की बाबा इथं आपल्याला काहीतरी लॅग होणार आहे किंवा इथं चेंज इन ट्रेंड होणार आहे. ओके, सो दीज आर द बेसिक इम्पॉर्टन्स ऑफ मुव्हिंग ऍव्हरेज, लाईक वी कॅन यूज इट ऍज अ क्रॉस ओव्हर स्ट्रॅटेजी. ओके, आता पुन्हा एकदा थेरी बघूया. तर बघा, देर आर व्हेरियस टाइप्स ऑफ moving averages. We can use it as crossover strategy. It is a lagging indicator. Lower period is more sensitive as compared to higher period. आणि हा पॉइंट मिस झाला. आता इथे बघा, ज्या वेळेला प्राइस इथे वाढत चालली आहे त्याच्यावेळेला प्राइस इज फाइंडिंग सपोर्ट समवेअर अराउंड द 50 days मूविंग ऍव्हरेज. ऍट द सेम टाइम त्याला प्राइस पडतीये त्याच्या वेळेला बघा किंवा वाढते त्याच्या वेळेला सुद्धा इट इज फाइंडिंग रेजिस्टन्स समवेअर अराउंड हिअर. म्हणजे त्या पर्टिक्युलर लाईनच्या वरती किंवा खाली प्राइस जात नाही. आता इथं खाली गेले का तर इथं अचानकपणे मोमेंटम आली होती एकदम 15 ते 3 आठवड्याच्या पिरियड मध्ये. त्याच्यामुळे इथं असं झालंय. पण हे वन्स इन अ डेकेड होणाऱ्या सिच्युएशन आहे. त्याच्यामुळे इफ यू इग्नोर दिस सिच्युएशन, इथं बघा आता इथं शक्यतो ही प्राइस या लाल रेषेला धरूनच चालली आहे. त्याच्यामुळे दिस वी कॅन कॉल इट एज इट इज वर्किंग लाईक अ सपोर्ट अँड रेजिस्टन्स. ओके, so these are the importance of moving average. So now moving further, the next type of moving average is an exponential moving average. आता प्रॅक्टिकली एक्सपोनेन्शियल मूव्हिंग ऍव्हरेज बद्दल तुम्हाला फार नाही आहे, जस्ट हाऊ टू कॅल्क्युलेट आहे. पण कॅल्क्युलेशनचा पार्ट सुद्धा थोडा क्रिटिकल आहे त्यामुळे मी तो पूर्ण कम्प्लीट करत नाहीये. फक्त मी एक तुम्हाला बेसिक डिफरन्स सांगतो बिटवीन सिम्पल मूव्हिंग ऍव्हरेज आणि एक्सपोनेन्शियल मूव्हिंग ऍव्हरेज. इज दॅट सिम्पल मूव्हिंग ऍव्हरेज मध्ये प्राइस ड्रॉप्स ऑफ द अर्लियर डेटा. म्हणजे समजा तुम्ही 10 दिवसाचं मूव्हिंग ऍव्हरेज काढताय आणि तुम्ही 11वा दिवस जर ऍड केला तर ते 10 दिवस दुसऱ्या दिवसापासून काउंट केले जाते आणि पहिल्या दिवसाचा जो प्राइस चेंज आहे तो प्राइस चेंज स्ट्रेट अवे इग्नोर केला जाईल 10 दिवसाच्या सिम्पल मूव्हिंग ऍव्हरेज मध्ये. पण एक्सपोनेन्शियल मूव्हिंग ऍव्हरेज मध्ये काय केलं जाईल तर त्या 11 दिवसांच्या पिरियडला एक इक्वल वेटेज दिलं जाईल आणि त्या वेटेज नुसार त्याचे ऍव्हरेजेस काढले जातील. त्याच्यामुळं एक्सपोनेन्शियल आणि सिम्पल मूव्हिंग ऍव्हरेज मध्ये okay, so exponential moving average what happens in exponential moving average is that if you are computing or if you are considering simple moving average as against exponential, simple moving average drops off the earlier days data. That is, if you are following 10 days moving average and if you have added 11th day in this 10th day, then simple moving average drops off the earlier data, that is first day data. But in exponential moving average gives a weightage to all these 11 days, equal weightage, and then after it draw its average. Okay, so in exponential moving average no data is there is nothing like the dropping of effect. So every data is considered while computing the moving average. At the same time equal weightage is given to each and every data. Okay, so this is the basic and this is the most important difference between EMA, that is exponential moving average, and SMA, that is simple arithmetical moving average. Okay, so basically the composition is a different part. If anybody want anything about composition of exponential moving average, then they can directly contact me. I am very much happy to share the composition of exponential moving average to them. Okay, so the most important factor of EMA is that it does not drop off the earlier data but gives equal weightage to every data. So this is the great and major impact. But this is a practical implication. So we have to look it into practical basis if you want to compare the exponential moving average and simple moving average. Okay. So now how can we evaluate this technical analysis? Okay. So in order to evaluate, that is, if you are going to evaluate this technical analysis over fundamental or over anything else, how can we evaluate this? There are benefits of this, like we are able to identify the trend at very early stage, that is at the starting of the trend. At the same time we are able to identify change in demand at early stage. So how can we do this? We can do this by reading chart patterns, by reading different indicators, by reading different patterns, by applying different types of indicators. So if we also by applying different types of theories. So if we apply these 5 points and we have knowledge of these 5 points, then we can easily easily analyze the market well in advance. Okay, so this is the important benefit of technical analysis. The next important analysis is that every technical analysis has its own perspective. Okay, I'm saying this because if you ask any technical analysis regarding a particular situation, then everyone will everyone will respond to that question differently. So there is nothing like a rigid prospectus. So everybody has its own opinion and everybody is going to do accordingly. So everyone has their own perspective. Okay, now this is the major disadvantage in my point of view. Technical analysis are not able to offer convincing explanation of tools used by them. Okay, this is because the party that they are going to show their findings to with whom. So if the front party is not able to identify what the technical analyst has used, so the technical analyst is not able to convince him, or he is not able to give the proper explanation of what data he has considered to reach that particular conclusion. Okay, so this could be the difficult, or because if you look at the technical analysis day before yesterday, you could have find this some difficult. Okay, so but after you have completed this 2 day session, then you are able to understand what is a technical analysis and how can we use this. So in order to get to the conclusion, we have to do the proper explanation or convincing explanation in order to know more about technical analysis. Okay, so this could be the drawdown, or we can say that this could be the disadvantage of technical analysis. Okay, now here we are at the conclusion part of the our today's webinar. That is, if we look at this, all these slides, all these chart patterns, and all this information, we could reach at the conclusion that technical analysis works well with fundamental analysis. That is, if we use technical analysis with fundamental analysis, then uh, it will work in long term so well. So not necessarily you should know everything about fundamental analysis. A little knowledge of fundamental and a whole knowledge of technical analysis also support, but I'm not at all saying analysis is not useful. It is also useful, but it has its own perspective. Technical analysis has its own perspective. It has its own disadvantages. It has its own disadvantages. So, better as compared to anyone. So analysis, I cannot say that TA is greater than FA or FA is greater than TA. So they can work well with each other. The next point is that if you want to improve your in technical analysis, you have to increase your work day by day. It is nothing like if you study all those charts, if you study all those patterns, and you are going to trade on the very next day. It will not work like this. You just have to sit into the in front of your desktop. You just have to watch the market. You just have to analyze the market, and then by improving your earlier errors, you are able to improve day by day. So it is a evolving process. Every single day you are going to learn new things, like if you are implementing technical analysis. And finally, the best that I would like to quote here is that it works so well irrespective of the country, irrespective of stock, irrespective of the segment, as well as sector. Because in last week, one of my friend who is residing in USA, he asked me about the Apple share. So he was asking me how can I trade in that particular share. So I asked him to provide me the chart, and I studied the chart, and I applied all my technical analysis skill on that chart, and I have shown him that all my findings, like where is the support, where is the resistance, when the price can go reverse, or when the price will start rising. And within a week, the momentum of that share is very similar with my findings. So I can say that this technical analysis works irrespective of the country, because it is not like if you use in India, it is different. If you use in USA, it is different. If you use somewhere around, it is different. Or if you use in stock, it is different. If it is in commodities, it is nothing like that. It is easy, and it is similar for each and every aspect of the market. So once you learn the technical analysis, it will help you, it will enable you to work in every type of market. Okay, so here we are going to conclude our 2 days webinar. Here I would like to thank to Team Vikasa, and at the same time I would like to thanks the Kolhapur branch of ICI, WRC of ICI. They have given me a opportunity to talk about such great topic. म्हणजे या टॉपिक बद्दल आतापर्यंत कोणी बोललेलं नाहीये. त्याच्यामुळे आय एम व्हेरी मच थँकफुल टू सुशांत, आदित्य, and everyone who has participated in this webinar. Thank you so much. If anybody has any doubt, they can ask their doubts.
If anyone having any doubts, please ask it here.
Okay.
Okay, I will Mandar. He's
Okay. Okay, Vanda.
Hello, Mandana.
How can we trade using volume indicator?
How can we trade?
Using volume indicator, can we trade using what or by watching volume indicator lines? Can we decide how to trade? Uh, what amount of volume is there on the basis of
Okay,
volume?
so okay, okay. So I got your point. So if you are looking this chart, the volume has increased so much, so well here. Okay, so this increased volume tells us more about that the buyers are so much involved with the higher price. So the buyers are expecting this higher price. So this is indicated by higher volume, but not all the time higher volume indicate the higher momentum. If you have witnessed the change in price at a certain point of time, then you are not at all allowed to invest at this point. What you are allowed to do, you just have to wait the price to go downward somewhere around here, and then you can enter, because this type of volume is not general in nature, because this is a very special type of volume, because you can see this type of volume once in a while. Okay, so if you can identify this type of heavy volume, then I would suggest just ignore these volumes or just ignore these types of trend. But if you could see that yesterday we have studied about flag pattern. So the same flag pattern that I'm witnessing over here also, this is like a flag pattern. So once the flag pattern has been broken, the price has started its momentum again. Okay, so basically this was a rising momentum. Price has halted for some period of time, and then okay, so if we use these chart patterns like flag with the increased volume, like the breakout has given with higher volume, so this indicates that there is proper momentum, or the number of buyers are involved are so high, so that we can enter into the price. Okay, so is that clear?
Yeah. Okay. Thank you.
Okay.
If anyone else having any question, we will wait for 2-3 minutes. If anyone having any question.
Okay, okay. So no problem, no problem.
In the meantime, I just would like to tell that the previous session, which was conducted yesterday, will be going on YouTube channel also. And today's session will be available on YouTube channel.
Okay, if nobody has any questions, so can we wrap it up?
Yes, sir. There's one chat on this. Just a minute. I will check.
Okay, okay. Yes, okay. Okay.
Okay. There's no question as such. The YouTube channel name is Kolhapur ICAI, and when the video goes on that channel, you guys will be know you guys will get to know about it through our social media handles like Instagram. The Instagram account name is Vikasa Kolhapur. So thank you, Omkar sir, for this wonderful session of 2 days.
Yes, thank you.
I am sure that the people who have joined this session have got to know many techniques from it. And if anyone has any doubt afterwards, then they can contact us. I will be sharing my contact number here, and as well as I will share Omkar sir's number if that's okay with him.
Okay, okay, no problem. You can share.
Okay, so I will just share number over here and note down that number. So if anyone's having any query afterwards, they can call him.
Yes, definitely. If anybody has any questions, Aditya will share my personal number as well as email ID, so they can reach me on my mobile as well as they can reach me on my email. Okay. So everyone, every query is welcome.
Thank you very much, sir, for this session. And
Yes.
today's session will also be going on YouTube channel.
Yes, we are going to upload in YouTube channel today's session.
Okay. Okay, sir. So here I conclude session for the day. Thank you very much, all of you.
Yes, thank you. Thank you. You have been a great audience.
Thank you, sir.